The trade desk just had one of its worst days ever on Friday, plunging 38% after earnings. But here's the thing, the earnings really weren't that bad. What caused the crash? Well, in this video, I'm going to break down the earnings, the conference call, what the CEO said, the fundamentals, and the growth factors moving forward. I'm going to show you exactly what I'm doing on the option trading platform and how I'm going to profit with a live trade over the next few months. Should be a fun video for you here today. I appreciate you all for being here. One thing I ask, one thing only, smash that like button down below. It really helps out the channel, and you're certainly welcome to subscribe as well. We're at an all-time high for subscribers, so thank you very much. So what happened last week, and was it really that bad? Well, the trade desk reported revenue of $694 million, marking a solid 19% increase year over year and slightly beating analyst estimates. Earnings per share came in at 41%, meeting forecasts. The company posted adjusted EBITDA margin at 39%, reflecting strong profitability despite some margin compression compared to prior periods. While revenue guidance for Q3 aligns with expectations at around $717 million, it disappointed some investors seeking more aggressive growth. CEO Jeff Green highlighted meaningful platform innovations during the quarter, such as Kokai, which uses AI to enhance advertising performance, and ongoing growth in connected TV retail media. Notably, the company appointed Alex Kayal as the new CFO effective August 21st, bringing over 20 years of tech investment and executive experience. This CFO transition, alongside with the cautious outlook, contributed to the market's negative reaction despite solid underlying metrics. Let's take a look at some of the things that CEO Jeff Green said on the conference call. All right, here's the conference call transcript. And you can see right here the key takeaways. They delivered 19% revenue growth in Q2, and they have adjusted EBITDA 39% margin, which we talked about, and $717 million. Now this is a 14% year over year growth, but ex-political, it's 18%. So due to the election last year, there was a lot of news coverage, and that affected their business. Adoption of the AI-powered Kokai platform reached 75%, and they expect this to reach 100%. This is utilizing AI that really separates them, and they're at the forefront of it with digital advertising. Supply chain innovation, OpenPath and Sincera data tools. So these are great data tools that the trade desk has, and Deal Desk is now in beta, so they're still coming out with new products. The risk is the company warned tariff uncertainty, which we know is getting stabilized, and related economic volatility that pressure large advertiser budgets. So I see advertising budgets increasing with the tariff uncertainty being eliminated over the next month or two. And the Q3 outlook, they put a conservative outlook out there, but I think they're going to beat Q3, and the rest of this year should be good, but we'll see. All right, so this is the CEO, Jeff Green. We again posted strong growth in the second quarter, 19% compared with Q2 of last year, and we continue to outpace the digital advertising market, driven by the innovation and value we deliver. Partners like Disney, NBCU, Walmart, Roku, LG, Netflix, so all the big guys, and others are deepening their relationships, and they see the opportunity in CTV, and this delivers the most effective and highest return on ad spending compared to insertion order or programmatic guaranteed buying. So CTV is big. That's really their growth engine moving forward, and it's basically internet TV. So everybody's going to streaming, and a lot of people are getting rid of their cable bills. At least I know I am. Actually, I'm going to go to Verizon and get on their plan right now and drop Cox this weekend. So they are seeing nothing but good going forward. We're delivering on Kokai, our most significant platform upgrade to date, and one that represents a new frontier in digital advertising trading. Kokai gives advertisers unprecedented power to drive precision and relevance in everything they do. So Kokai's huge. And Samsung, they've got customers that have proven it. Samsung was able to drive a 43% improvement in reaching its target audience. Cash Rewards saw a 73% improvement. So they're improving their KPIs. Their overall ad spend on Trade Desk by more than 20% faster than those who have not. So all positives. This is precisely why we believed it was possible when we launched Kokai. Advertisers are getting meaningful, better returns on their ad dollars, and they're doubling down on the open internet and on us as a result. So if we move down further and getting to the question and answer phase, we're going to go through some of the numbers, but CTV remains our biggest opportunity and we continue to see amazing momentum. We're also seeing great traction in retail media, and our joint business plans have more JBPs under negotiation than we've ever had before. Those are joint business, I would say ventures, but they're joint ventures. I need to find out what the acronym is. If you know, let me know in the comments below. But I could put it in AI and figure it out right after this video, but I'm not going to stop. All right, so they're actually growing their customer relationships and business greatly moving forward. All right, let's see what else we've got. I think there's another couple of highlights I have here. The reason I am bullish is that in volatile markets, this is the CEO Jeff Green, these things have historically accelerated the move to programmatic precisely because it comes with control, agility, and performance. So what that means is that in volatile environments, when things are moving up and down, their customers want to see specific analytics. So they're going to get more tight with their ad spending, and they're going to only spend on ads that produce results. And that's what more analytics and what the Trade Desk provides really helps. The number of joint business plans we have with major advertisers continues to increase, and the spend under those JVPs is growing significantly faster than the overall spend on our platform. Agility and flexibility matter more than ever. And the releases, especially over the last month, have made Kokai truly the best ad tech platform ever pointed at the open internet. So you can see the CEO is extremely confident, and he's not going to be fazed by the pullback in the stock. So stocks don't just move straight up. They get higher valuations, and to tell you the truth, I thought that the valuation on the Trade Desk was very good even before the big drop. So I can see it rebounding back just like it always does after earnings. Kokai is driving real performance gains, and the AI underneath is powering both near-term and long-term innovation. So that's kind of an overview. One more point here. If you look at how much of CTV has been made up by those in the past and will likely represent the lion's share as far as we can see it in the future. So basically those ads on the streaming TV is going to be huge going forward. So what are the key growth factors and fundamentals for the Trade Desk? Well, it continues to demonstrate strong fundamentals with a customer retention rate consistently above 95%, reflecting robust client loyalty maintained for over a decade. Key growth drivers remain connected TV and the broader adoption of digital advertising, areas where the Trade Desk is innovating through platform enhancements like Kokai and expanding partnerships. So what's next for the Trade Desk? Well, looking ahead, analysts have mixed expectations for the Trade Desk upcoming quarters. For Q3, revenue guidance of approximately $717 million aligns with estimates, implying modest growth but failing to excite investors seeking stronger momentum. Earnings per share forecast hover around 20 to 33 cents for Q3 and Q4, reflecting tempered optimism amid increasing competitive pressures. Despite solid growth potential driven by expanding connected TV usage and digital advertising adoption, TTD's current valuation is high relative to its growth rate in some people's opinion, not necessarily in mine. Key catalysts for a recovery include successful execution of platform innovations like Kokai, stabilizing competition from Amazon and other giants, and a smooth transition with CFO Alex Kyle. Hey, talking about Amazon, well, the CEO, Jeff Green, really sees Amazon as a potential partner versus a competitive company. However, risks remain. Accelerating rivalry from big tech players, cautious advertiser spending due to macro uncertainties, and the possibility of slowing growth could further weigh on the stock. The company's strategic moves to innovate and diversify revenue streams will be critical in countering these headwinds and regaining investor confidence. All right, guys, this is the Tasty Trade option trading platform, my favorite, super intuitive for trading options. There's a link down below. Check it out. There's some benefits if you go through my link. All right, we punch in TTD right here in the upper left on the option trading platform, and we're on table mode and the trade page. Now I'm going to do a leaps option and go out to June of 2026. This is 313 days to expiration. I'm going to click on this to open it up, and you can see I've already got a couple of now 70 long calls or leaps options on. So I've got I think 3 tranches total, but I'm confident the stock's going to come back. So if we go to the 50 strike, so we're going to go in the money, and I'm going to go to the 66 delta, so that's the 50 strike, and we're going to click on the buy. Calls are on the left, puts are on the right, and buy or the ask is right here, and we're going to click on that. And it's going to bring the price of $14.25. Mid price is $14.15. So one option contract controls 100 shares of stock. So that's really $1,415. However, if we were to purchase 100 shares of stock outright, it's $54.23 is the stock price times 100 shares is $54.23, $5,423. So it's less than 20% of that. To control the same 100 shares. Now, what I like about this option trading platform at Tasty Trade is we can go to curve mode right here, and we can go to analysis, and you can see as the stock price increases in price. I've already got some on, so it's effective that I've got these 3 calls on right now that have lost money to date, but they're going to come back. The stock price is going to move up, I'm confident, and as the stock price moves up, we make money just like owning the stock outright. So 14, 15, if we get up here to the $100 price range, we've got P&L at expiration. You can see up there $59.68, so almost $6,000. Even at 95, we're making almost $4,000. At 90, we're making $19.88, so we're doubling our money. All right, now we're going to close up this option chain, and we are going to open this September. So we're going to sell a short call against the leaps option. So this is what makes it a poor man's covered call. It's utilizing capital very efficiently. We'll open up that September, and we will go right here. I'm going to sell, I'm going to allow some room to the upside, so up to 60. We're at 54 right now. It's going to allow $6 to the upside for profit on the leaps, and we're going to collect $1.73 or $173 since it's 100 shares of stock that it owns, and that brings the cost down to $12.36. So immediately we're at $12.36. We can do this every month, collect a couple $100 a month, and pay off the option contract in less than 6 months, and control 100 shares of stock basically for free in the trade desk, which just had that significant drop and is poised to come back quickly. We hit review and send, and we place the trade. All right, guys, be sure and download the free options workshop in the link below. Hit like and subscribe. Leave a comment, ask a question. I answer everyone. And if you like this video, watch this next one.